Hello, everyone. Welcome to Rule Investment Media Live. I'm Albert Liu. I'll be your host today alongside Rick Rule. Rick, how are you today?
I'm fine, Albert. Thank you for continuing to put on the session. I'm looking forward to it.
It's great to be here with you, Rick. Today is, we're calling it a makeup session here. Today we're going to be live with John Miniotis and David O'Connor from AbraSilver Resource Corp. Of course, they were a guest on our post-symposium live Q&A last month. We're due to some technical difficulties, we decided, and we were asked actually by viewers of the program to bring John back so you and he could continue the discussion and perhaps have a little bit more interaction than circumstances allowed last time. So I'm going to bring John on, and let's go ahead and get started. John, how are you? Good to see you again.
Hi, gentlemen. Thanks very much for having me back on.
Welcome, John.
Great. So let's...
you go ahead, Albert.
Go ahead, Rick. I just said, let's continue, or let's just start. Let's not assume everyone on the feed today heard your opening remarks last time. So maybe we'll just start with the opening remarks and then have Rick jump in and, like last, begin with some questions.
Perfect. No, that sounds great. So yeah, just as a quick intro, AbraSilver is a high growth silver and gold exploration company. Our key project is called Diablilos. It's in the mining friendly Salta province of Argentina, which is in northern Argentina. And we already have a large established resource estimate here on this project. So it's very well advanced. We have a measured and indicated resource base of over 215 million ounces of silver equivalent, and that's only silver and gold, so entirely precious metals here, no base metals, and that's in oxides, close to surface, easy to mine, quite straightforward processing. So a nice sizable project that we've been advancing now for several years. But I think what's really caught a lot of people's attention here is that we also just last year, over the past 12 months, have announced some incredibly successful drill results from a brand new discovery. So this is still at that same project. We have now a second pit, so located just a couple 100 meters away from that large scale deposit. We have a new deposit where we've just recently completed drilling over 22,000 meters in about 115 holes. And we've literally announced dozens of world-class intercepts from that new Jack deposit. And so that, exploration program has wrapped up now, and we'll be announcing a resource estimate shortly to be followed by a pre-feasibility study within the next few months. So a very, very exciting outlook ahead of us here.
All right, and joining us now is Rick. Sorry, Rick. It looks like there's a bit of delay. Just want to say that David O'Connor is joining us, and he is geologist at AbraSilver. Rick, go ahead. Sorry.
Well, to begin with, hi, David. Long time.
Yeah, a long time.
Hope you're keeping well.
Every time I see you, you're surrounded by so many people, I can't get near you.
Barge your way in. I always have time for old friends. John, let's begin by the existing oxide deposit at Diablilos. Approximate tonnage and grade?
Yeah, so we're looking at 57 million tons. The grades are about 66 grams of silver on average, and about 0.8 grams of gold. Now that average silver grade varies quite a bit. So we have a higher grade silver section within that, which averages about 100 grams per ton of silver. And that's about 20 million tons. And then the remaining, as you get down deeper into the deposit, it's more higher grade gold, and your silver grade drops off a bit.
And this new higher grade discovery, would you regard this as a sort of a separate phase of this deposit? Is it a feeder to this deposit? What is it?
So this is a separate zone. Dave can talk about the geology in a moment, but this is already seems to be a large scale deposit. So we're talking about this new Jack zone, is about 800 meters along strike. In certain areas, it's about 200 meters or so width, and down to a depth of about 200 meters. And so this is a sizable deposit. But yeah, Dave O'Connor is our chief geologist. He can walk you through the geology here for sure.
So David, how would you describe the relationship between these two deposits, and what is the second deposit?
The whole system is a high sulfidation epithermal system fed by a porphyry at depth. We've had Richard Silito out there to wave his magic wand over it, and he says there's definitely a porphyry down there that is feeding the system. It's a copper, gold, silver porphyry, and the gold and silver is concentrated in an epithermal system above the porphyry, several hundred meters above the porphyry. And the silver zone at Jack is actually a lateral zonation away from the gold silver center of the system, which is at a Corp.
And just to be on the safe side, we're not expecting to have any problem with copper contamination in the oxide silver, which might be deleterious to leaching.
We've done a lot of metallurgical test work on that, and no, we don't expect any problems, although there's quite a sharp break between the oxides, which go down to around about, let's say 200 meters depth, and the sulfides underneath, which are predominantly copper, and in the center of the system, predominantly gold in sulfides, sorry.
Yeah.
Gotcha.
And so just to clarify there, Rick, I mean, the entire resource right now at Corp is in oxides. And so it's all cyanide leachable. It's gold and silver, very little copper within that. And of course, as you get down deeper, we've hit some remarkably high grade copper intercepts. I mean, a few months ago, we announced at Jack, I think it was over 30 meters of 3.3% copper. So there's some high grade copper here deeper down into the system in the sulfides. But that has not, we have not yet calculated a resource on the sulfides at all. We've been focusing on the oxides, which are cyanide leachable in quite straightforward process.
So let's continue to do that. For people, first of all, how high is the deposit? What's the elevation?
4,100 meters above sea level.
Okay, and in that sort of upper Salta, Puno region that is hosting so much mining activity, correct?
Correct. Yeah, typical elevation. A number of lithium projects around us at similar elevations. Get very little snowfall here on an annual basis. So we drill 12 months per year. The elevation's really not a huge issue there.
And if my memory isn't mistaken, Fortuna operates a gold mine.
That's right.
At that altitude. Isn't that correct?
That's right. So that's the Lindero. That's a gold heap leach project and a mine. And that's, similar. I mean, it's slightly lower elevation, but it's similar, roundabout, close to 4,000 meters elevation.
So for people who are concerned about open pit heap leach operations, oxidized beneficiation at altitude, there is an adjacent success story, I guess is where I'm getting to.
Exactly.
Yes, there is, but there are geological differences which I won't bore you with. But Lindero is actually an outcropping porphyry system, and it's had the high sulfidation epithermals eroded away, whereas we have the entire high sulfidation epithermal system above a porphyry at depth. That's the difference. And with regards to the oxide zone, which is what we're drilling out to feed the cyanide leach circuit, there was copper in the system. It's been leached out of the system in the oxides and has been reprecipitated at the oxide-sulfide interface as a chalcocite enrichment.
Got it. Thank you. So in terms of what you are hoping to do, I guess the best way to say this is, what is the principal or several principal unanswered questions? What are you going to do in the next 12 months that is going to increase the market's certainty around the economic viability at Diablillos? What are the most important objectives, and how do you expect to accomplish them?
Yeah. I mean, first and foremost, as an exploration company, as any explorer, I mean, the main goal is to continue to grow this project. And I think we've been very successful in that over the last year. As I mentioned, this new Jack deposit here has been drilled out now. So we completed 22,000 meters. And so immediately, I mean, within the next 4 weeks here, should be announcing a resource estimate. And I think, people will see a lot of value in that resource estimate. As I mentioned, this is a sizable new discovery, significant deposit here, which is much higher grade than Oculto. And so now we've expanded, not only growing the number of ounces, but growing the quality of the project, which is important. You're adding tons and you're adding grades from this new jack zone, and you're getting better recoveries as well from silver in this new deposit, and it's better strip ratio. So a lot of multiple benefits from that new jack zone, which we can cover in detail if you like. But yeah, as we look forward, I mean, now it's time to put a pre-feasibility study around this project, which will be the two key deposits for the time being. But going forward, the real goal is how many more near surface deposits are here. We believe we have at least 3 other high-grade, high-quality targets that we intend to be drilling in the next 12 months here as part of the next phase of exploration. And so it's, how many deposits can we uncover here? And obviously then the goal is to continue to advance and de-risk this project forward.
When might you expect this pre-feasibility study to be done? Is there a lot more drilling that needs to be done?
No, the drilling's completed. So the drilling for the resource and for the pre-feas is completed. So that's that's been ongoing for 12 months now. That was just completed a few weeks ago. So now it's getting back the last sort of 2 holes from the lab, and then we'll be able to announce the resource estimate by early October. The pre-feas, we've been working on that for 12 months now behind the scenes. Again, so it's 2/3 complete. We expect to be able to finalize that, I'd say, in early January. So very early on in the new year, we'll have a pre-feasibility study completed and announced.
I might just add, sorry.
Please.
I might just add that, we did the PEA, and the parameters of the PEA was such that the project had an NPV of about $450 million. The PFS is going to be, it'll have some very positive factors in it. As John mentioned, the jack zone is going to have higher grade silver, and it will have considerably higher grade recoveries. And some of that is going to spill over onto Oculto, where we're going to be expanding. We will have expanded the Oculto resource from the drilling that hasn't been announced yet or hasn't been incorporated in the study. And we will be improving the metallurgy based on the work that we've done so far. One major aspect of this is that we've been experimenting with gravity separation, and we have about between 5 and 9% gravity separatable silver from the jack zone, which adds considerably to the overall value of the project. And we will do those studies on Oculto, which weren't done before. So whereas we had a recovery of 73% for silver at Oculto, we have in high 80s% recovery at Jack, and we expect to improve the recoveries at Oculto as well. So there are various positive factors which will improve with regards to the PFS.
Would I be out of line to suggest then that the former NPV numbers should be looked to be raised substantially?
Yes. Yeah, I think that's a very fair assessment. I mean, so the previous study did not include the jack zone, which, as we mentioned, has a number of benefits. And so, I think at Oculto itself, we've done a bit more drilling. We've expanded that deposit as well since that PEA study. So that PEA study was announced back in November of 2021. So it's approaching 2 years old now. We've done a lot of exploration since then, growing Oculto and now discovering Jack. And so, yeah, we certainly expect the economics here have improved.
And putting that NPV number in context, remind me, the NPV number was four and change?
470 million Canadian. Now that was done at $24 silver and only $16.50 gold. Right. So quite conservative gold price assumption. I mean, we also showed some sensitivities. So if you were to use 1900 gold, which is closer to spot, but higher silver prices, I think it was like 27.50 silver. The NPV was 700 million Canadian. just on Oculto alone.
Well, just for fun, let's use the conservative numbers since you're expecting to increase both the number of ounces and the tenor of those ounces anyway. Compare that. What's your current market capitalization?
About 180 million Canadian.
So for 180, in effect, net present value 475 plus. Tell me something about what you expect. I understand this is very preliminary, that the numbers will be more refined in the pre-feasibility study. Tell me something about the way you envision the mine now. What would the capital costs likely be? If you think you're at liberty to say that, and what sort of guesstimate do you have in terms of both annual production and ultimate production?
Sure. So in terms of CapEx, the PEA study had 255 million US of CapEx. Now, around 55 million of that was on pre-stripping, and so because Oculto's on a hill, there's $55 million worth of moving waste initially that is capitalized and included as part of that upfront CapEx. So if you take that out, it was a $200 million CapEx. Now, I guess with the benefit of Jack, the pre-strip is significantly lower because this is free dig material. So if you were to start the mining at Jack, you could expect the capitalized strip ratio to be significantly reduced there, which would help reduce costs. But you're still looking at roughly, I'd say, $300 million sort of CapEx, I think, is in the right ballpark, because we're now looking to expand the throughput of this project. So it was done at 7,500 ton per day. We'll now be running the scenario, probably our base case, we're looking at 9,000 tons per day, just given, we now have two deposits here that we need to be mining. So roughly $300 million CapEx here. Initially the production profile was about 14 million ounces a year silver equivalent for the first 5 years. And that's again at Oculto. So Oculto has this high grade starter. We call that the Tesoro zone. I mentioned we have much higher silver grades in the early parts of the mine life there. So you get excellent production profile. And the thing is, now that you have Jack, the entire thing is more or less high grade. You're looking on average about 200 grams per ton of silver, and with higher recoveries. So, I think we're obviously still finalizing a lot of these figures. So I can't start throwing out any IRRs or net present values. I mean, we'll have to wait for all that work to be finalized. But certainly, it's looking very, very promising, I would say, at this stage.
But
I'd just like to make 2 comments on that. One is that, as John mentioned, at Jack, the stripping ratio is going to be lower. And he mentioned that it's an unconsolidated material above. There's about 50 meters of unconsolidated colluvium above Jack, which doesn't need to be drilled and blasted. It just gets bulldozed out of the way, whereas the drilling and blasting gets done at Oculto. At Jack, the stripping is going to be about $1 a ton to move, and at Oculto, the overburden is going to be about $3 a ton to move. But at Oculto, we've been doing metallurgical test work on lower grade material, and there's a considerable amount of that stuff higher up in the system, which is classified now as waste, or has been classified as waste, which is going to be low grade ore that can be put on a heap leach as opposed to going into the CIL circuit.
And will that be included in the pre-feasibility?
Yes.
Okay, great. Sometimes these things end up being end of mine projects that have very little net present value.
The thing is, we've got to move it anyway.
Yeah, I understand. I understand completely. For those of the audience who are skeptical about mining at 14,000 feet or 4,000 meters, or are skeptical about mining in Argentina, perhaps you could describe something about the mining activity at high altitude in Salta now.
Yeah, I mean, we've already talked about, so Fortuna, Lindero, that's up and running. That's been ongoing for a couple of years now as well. We're surrounded by lithium projects. So we're right in the heart of the lithium triangle. There's 4 projects being built all around us within, almost our immediate neighbors. We're talking about within a 20-kilometer radius of us. There's 4 development projects. large scale lithium projects here. All of those are being built. All of those are at similar altitudes. And yeah, we mentioned, I mean, this is not up in the Andes. You're not, you don't get a huge amount of snowfall per year, shutting down, drilling or anything like that. We're at high elevation, but we're in a desert-like environment. So quite dry. Yeah, I'm not sure. Dave, what else would you comment there in terms of the elevation? I mean, for us, it's been a non-issue. We've been drilling for the last 36 months continuously here.
Well, John, as you know, I used to live in La Paz, which is about this altitude anyway. So, it's even old guys like me can live in that environment. It just means that old men and machinery work at 65% capacity in relation to sea level.
That's right. Yeah,
I'll leave that alone. Living at sea level, I can see Albert coming on telling me I'm running out of time, but I do have a couple of more questions.
No, we're good, Rick. I just
okay.
Can I just interject a question here? We have a question from the YouTube audience regarding the PFS. John, is coming on screen now. Pro Gamers Fortnite wants to ask which firm is doing the PFS.
The pre-feasibility study. So that's done. So right now, Dave, who is that? So we had Mining Plus. That was the PEA. Now, in terms of the pre-feasibility study,
well, we're doing a lot of it in-house with
that's good.
And with SGS and Bateman, yeah.
Yeah. Bateman's helping out on the engineering side, and then SGS is contributing as well. And we have a number of independent consultants as well working for us.
I guess back to me. I'm still stuck on prior questions. One would assume that with the amount of mining activity taking place in your sort of general neighborhood, that what would otherwise be infrastructure costs are being absorbed in effect by others. Is that a correct assumption? And will the PFS number incorporate offsite infrastructure charges?
Mm-hmm. Dave, you want to comment a bit about that?
Well, with regards to infrastructure, if you look at a map of lithium projects around us, there are 4 lithium projects within about 30 kilometers of us. And we share an airstrip with a company that we've had good relationships with for a long time. We allowed them to use our camp when they were building theirs, and that's POSCO. Now, POSCO is a major lithium project, and Eramet to the north of us, they have offered us their excess water from their lithium project. Whether we use it or not depends on the characteristics of the water, mainly with regards to corroding the tubes, etc. But no, yes, we have a lot of infrastructure with regards to roads, etc. And more importantly, I think, is that there's a new gas pipeline parallel to the old Phoenix pipeline being built specifically to service the mining industry in our area, and that's supposedly going to be built next year. It's orchestrated by the government, built by the Chinese, and financed by whichever mining company is going to have an offtake.
Interesting. Well, I think that's very, very helpful in terms of, one of the challenges in these types of things has always been the infrastructure challenges. Tell me something now, since we've done a bit of work on the valuation with regards to the current assets. Tell us something about the assertion that you had about other productive zones on the property and the exploration work that we can look forward to in the next 12 to 18 months.
Yeah, maybe Dave, you want to talk about Jack North, Phantasma, Alpaca, some of these other targets?
Yeah, sure. Yeah, all the previous work prior to last year, mid last year, was at Oculto and the immediate surroundings of Oculto. We were drilling Oculto. We had 2 rigs going at Oculto to expand the measured resource there at Oculto, to expand the higher grade resource. And then we did ground magnetics, which identified low magnetic anomalies, linear anomalies underneath cover on the covered part of the western half of the concession block. And our exploration at Jack has shown that, yes, there is mineralization underneath that cover that had no reflection on the surface at all. And we have a series of other targets in that area. We've poked a few holes into the surrounding areas, and I might say that Phantasma is an area that has had prior drilling on, and that's about 1 kilometer to the west-northwest of Okolto, and we believe now that it is probably continuous with Okolto underneath the alluvial cover. And yes, we have several others. We've got a number of low magnetic signatures, which we are going to be drilling next year.
Yeah.
Well, the next program, anyway.
And just to add to those comments there, Rick, I mean, so we announced, so of course we've been focused on this Jack deposit, but I guess a month ago or so, we announced just 100 meters to the north of Jack. We drilled beyond the limits of Jack into a new zone that showed similar characteristics from that mag survey into an area that we call Jack North. We've drilled about 4 holes now into that other anomaly. One of the holes hit, I think it was 12 meters of over 1,000 grams per ton of silver. Again, this is close to surface in oxide, starting from about 60 meters downhole depth. So we've hit some remarkable high-grade intercepts there, which obviously gives us a lot of encouragement. And so right now we're prioritizing. I mean, we have a number of targets on this property. So we're in the process of prioritizing them. And then, you know, figuring out which ones we're going to focus on as part of the next phase of exploration.
So, John, you have an interesting 18 months, a pre-feasibility study to complete, and a fairly aggressive exploration program. Looking at 18 months, roughly how much money will you spend, and how much money do you have? And if there's a shortfall, where will it come from?
So yeah, great question. And so, you know, for us, we're fully in control of, you know, right sizing the next phase of exploration. I mean, the good thing is right now, the burn rate for us is significantly reduced as we've now completed drilling for this pre-feasibility study. And the pre-feasibility study, as I mentioned, is 2/3 complete. So already largely funded. There's less than $1 million left to be spent on that pre-feas. And so for the remainder of this year, very, very low burn rate. We have $11 million Canadian in the bank as of June 30th. And so that's enough to get us started on next year's exploration campaign. And that's, you know, very discretionary. I'd say under current market conditions, we could look to selectively drill out some of these targets until conditions improve. And so, yeah, I think that's something we're going to be evaluating closely in the beginning of next year, in 2024. What, you know, how aggressive do we want to be with the next exploration campaign? But yeah, to give you some sort of context, I'd say our last exploration campaign that we just completed cost us about $8 million US. So we're getting very, very good value here. So in terms of bang for your buck, we've been actually adding ounces here for the last 2 years. For every 12 cents we spend on exploration, we've added an ounce of silver into measured and indicated category. So we've been, you know, having great returns on our exploration dollars, and looking to continue that trend, obviously, going forward.
So would I be correct in summarizing that by saying that you can sort of fit your exploration deposit into your capital accounts, but you can also afford to be opportunistic with regards to when and if you take capital?
Exactly right. That's exactly right. Yep. Yep.
Got it. Got it. Albert, any other questions from the audience?
Not at this time, Rick. And we're just about out of time. So
Yep.
I want to remind everyone that the replay for this event will be available very shortly on YouTube, LinkedIn, and also inside the Rural Classroom. I want to thank John Miniotis for coming back again. It was a double commitment we got from you. Really appreciate it, and appreciate you bringing on Mr. O'Connor as well for clarity. So thank you, gentlemen, very much. And I look forward to hearing more about this project and more from you in the months and years ahead.
Thank you all.
Thank you very much. Thank you,
Okay.
Albert.
Thanks, Rick.
All right, Rick, maybe summarize for us what we just heard today from the gentleman.
Well, an interesting story. Clearly a big silver deposit. I'm not much interested in silver deposits that are less than 100 million ounces. This one starts life at twice that. My concern originally had been the relatively low overall grade, which was to say 66 grams or about 2 ounces, mining $50 rock at 4,000 meters. The high grade starter pit helps. It is easy to make money, or easier to make money after you've paid off the initial capital expense, which a high grade starter pit does. It's useful too that the material is oxidized material, meaning that you don't have to do too much to it. Rip it, blast it, move it, and then leach it. And the fact that it likely leaches, even at that altitude, is evidenced by an oxide gold mine, which operates successfully about 40 miles away. The potential game changer, I think, as they point out, is this newer high-grade zone. And the fact that it would appear that geophysical tools work on identifying new mineralized exploration leads undercover where they aren't visible from surface. It will be interesting to see the pre-feasibility study, which is, of course, a much more thorough document than either a resource estimate or a preliminary economic assessment. If these gentlemen are correct, which is to say, if there are substantial reserve additions or resource additions, and in addition to that, the grade is higher, the tenor is higher, and the certainty around prospecting is higher, it's likely that the net present value number that they quoted, $475 million Canadian, grows and grows substantially. The question then becomes, what are the assumptions that were used in the pre-feasibility study? We'll see when it comes out, but also, what is the market cap of the company relative to the valuations established in the pre-feasibility study? And what will be the capital stack? How much cash will, how much stock will they have to sell in order to raise the money to build the mine? And what's the risk-adjusted net present value relative to what the enterprise value will be? But all in all, I'd say a very heartening presentation.
Excellent, and lots of good unanswered questions for Rural Classroom members to ponder over the coming months. Rick, I want to let you go, but I can't let you go until we talk about the next Rural Bootcamp, which is going to be the Royalty and Streaming Bootcamp, October 21st, online. We've got Doug Silver headlining. Rick, can you tell us a little bit about that?
Well, I'm very excited about that. You'll know, Albert, that we postponed the boot camp because I couldn't get a suitable keynote speaker. With Doug Silver, I have the best possible keynote speaker, a guy I've known for 30 years, first of all, built a couple of successful companies, including the highly successful Orion Capital, had the first database that I know of mineral royalties. So he has forgotten more about royalty and streaming than most people will ever know. And I would suggest that his introduction to royalty and streaming will probably be worth the whole price of admission. I said before, Albert, that the royalty and streaming businesses are the best of the mining businesses. Ones where you have a financial rather than operating interest in the deposit. Ones where when they're passing out a bill for sustaining capital expenses, you don't get one. When they're passing out a bill for operating expenses, you don't get one. I've made the point, Albert, that for some investors and speculators, you could have an entire resource portfolio made up simply of royalty and streaming stocks. You would give up a little bit of the upside in a bull market because, ironically, in a bull market, the least efficient companies are the ones that enjoy the most leveraged return. But frankly, Albert, as I pass 70, you can take away some of my upside if you take away most of my downside. And that's what royalty and streaming does. We're going to have some great exhibitors, all of which I own. A great faculty. I suggest that anybody who enjoyed the uranium boot camp, who enjoyed the silver boot camp, who enjoyed the battery and electric metals boot camp will certainly enjoy royalty and streaming, which is, of course, more process than commodity specific.
I'm looking forward to that very much, Rick. So thank you. Remember, that's October 21st. Details at rulesymposium.com/bootcamp. That's all we have for today, Rick. Thank you very much for your time. I think people will get a lot out of this episode. Again, thank you to AbraSilver Resource Corp for participating in this. John and David, really appreciate your contributions today. And of course, the crew behind the scenes. Thank you. Rick, until next time, talk to you again soon.
Thank you again, Albert.